All right, let's get right into it. The crypto market is sitting on a knife's edge after a pretty nasty drop. And every single investor is asking the exact same question. Is this the dip we've been waiting for, the one to buy? Or is this the beginning of the end? Let's break it all down.
So yeah, the market just took a serious hit. Bitcoin fell about 12% from its all-time high, which, it really shook a lot of people's confidence and sparked this massive debate online.
And that dip? It triggered this huge cascade of forced selling. Get this, in just 24 hours, nearly $1 billion in leveraged long positions were completely wiped out. And just so we're clear, that's people betting with borrowed money that the price would go up. Poof, gone. That is a lot of pain in the market, and it's definitely cranking up the fear.
So this brings us to the big question, right? The bulls, they're looking at this and saying, hey, this is a healthy, totally normal pullback in a much bigger uptrend. But the bears, they think they see the writing on the wall for a major, major crash. So let's really dig into both arguments, and we'll start with the bulls.
Okay, so despite all that fear we were just talking about, the bullish case has some incredibly powerful arguments. We're talking about fundamental shifts that really suggest this cycle might actually be different.
First up, you've got major institutional validation. We are hearing the CEO of BlackRock, the world's largest asset manager, calling Bitcoin digital gold and a currency of fear. Come on, this isn't just some random hype. This is a fundamental belief in Bitcoin's value coming from the absolute pinnacle of traditional finance.
And it's not just talk. The data itself is super compelling. There's this respected collection of 30 different on-chain metrics, right? They're all designed to signal when a market peak is here. And right now, not a single one of them is flashing sell. Literally zero. They are all unanimously signaling hold. From a pure data perspective, this looks nothing like the market tops we've seen before. And it's pretty clear that the big money is actually buying this dip, not selling it. You've got publicly traded companies and all those new ETFs just accumulating Bitcoin faster than new coins are even being mined. Think about that. Every single week, these institutions are buying more than the 3,150 new Bitcoin that get created, which forces them to go out and buy coins from people who are already holding. Now, if we look ahead, the bulls also see a pretty stacked calendar. They're getting ready for Federal Reserve rate cuts, which usually gives a nice boost to assets like crypto. And on top of that, there's even talk from former White House insiders about the U.S. government maybe creating its own strategic Bitcoin reserve in 2025. Imagine that!
And maybe the biggest risk-on signal for the bulls is the political climate. There are reports swirling that Trump media is planning a massive $6.42 billion purchase of the cryptocurrency Kronos for its Truth Social platform. Now, if that's true, that would be a gigantic move signaling a really aggressive pro-crypto stance.
But that's only one side of the coin. Now we've got to pivot to the counter-argument, the view that a major crash isn't just possible, it's a matter of when, not if.
You've got market commentator Alex Becker, who puts it very, very bluntly. He argues that historically, the vast majority of retail investors, they just get euphoric near the top. They fail to take profits, and they ride the market all the way back down. In his view, our own human psychology is often the market's greatest enemy.
Becker and others point to this predictable pattern, this flow of money. It starts with Bitcoin, then it rotates into Ethereum. From there to the other large-cap altcoins, then the smaller ones, and finally it all culminates in this wild speculative frenzy of meme coin season. Now, we've definitely seen parts of this, but the bears argue that that final, most euphoric stage, it hasn't quite peaked yet, but it's coming.
A key indicator for the bears is just the social sentiment. How does the market feel? At a market bottom, anyone who's bullish gets attacked and insulted online. But at a market top, it's the complete opposite. Anyone who posts a bearish or even a slightly cautious take gets mercilessly ripped apart. It becomes this echo chamber of euphoria where any kind of dissent is just punished.
So it's really important to understand what a cycle top actually is. It's not a specific price, like Bitcoin hitting 150K. No, it's a period of time. It's characterized by extreme bullishness, wall-to-wall mass media coverage, and just this widespread euphoria where the smart money quietly starts selling their positions to all the excited newcomers.
Okay, so we have two very compelling yet completely opposite stories happening at the same time. How in the world do we make sense of it all? Well, this is the real challenge, right? Navigating all this noise.
We can kind of organize all these signals into 4 different lenses.
So if you look through the institutional lens with players like BlackRock and maybe even Trump media, things look incredibly bullish. Through the on-chain data lens, all the metrics are saying hold. But if you look through the lens of cyclical patterns and social sentiment, you start to see all the classic warning signs of a market overheating and euphoria building up.
And that, right there, is the heart of the conflict. We are caught between rock-solid fundamental data on one side and the predictable, often irrational cycles of human psychology on the other. The institutional money has truly never been stronger, but the age-old patterns of greed and fear have always ruled the market.
So this leaves us all with one critical question. In a market that's just caught between hard data and human drama, which signal is the one that's going to matter more? Is this time really different? Or are we just watching a very familiar pattern play out all over again? The answer? Well, it could make all the difference.